Hi everybody, this is Andrew Masters from FIBO Group and welcome to my weekly Forex report. To kick off Monday, we'll see the release of import and export numbers from China as well as the latest trade balance figures. The numbers were a disaster last month, with the export figure coming in at minus 3.3%, while the imports figure came in at minus 19.9%. The Chinese government have recently introduced a stimulus program such as cutting interest rates to help things along and boost the economy. The stimulus program may be helping the cause, as a survey of analysts by Reuters expect a rebound in the import and export sector this time round, which may give a boost to the Chinese yuan. On Tuesday, the market will await more data out of China as the latest CPI and PPI numbers hit the market. Currently, inflation in China sits at a 5-year low of 0.8%, while the producer price index came in at minus 4.3% last month, amid growing signs that the world's second largest economy may be headed for a deflationary period. We expect some volatility surrounding the Chinese yuan and the Australian dollar with the release of this news, as China is Australia's biggest trading partner. On Wednesday during the European session, we'll see the latest industrial production figures from Great Britain, and later in the day, the release of the interest rate decision from the Royal Bank of New Zealand. Industrial production in the UK has fallen from 2.1% a year ago to last month's reading of 0.5%, which has contributed to the sharp fall in the British pound over the previous year. With oil prices down more than 50%, helping to reduce overall production costs, we may see a slight rebound in the figure this time round. Interest rates in New Zealand currently sit at 3.5%, with the central bank recently stating that they would like to see a period of stability in interest rates. Some analysts don't agree with this, and one option they see is a possibility that the bank will follow Australia's lead and cut interest rates in the nearest future, so we expect a lot of volatility surrounding the release of this news. On Thursday, we'll see the latest jobless numbers from Australia as well as retail sales figures from the US. Unemployment in Australia currently sits at a 13-year low of 6.4%, which is why some analysts were surprised that the RBA kept interest rates on hold last week. We expect a lot of volatility in the Australian dollar surrounding this news, with a rate cut a possibility in April if the news falls short of expectations. Retail sales in the US came in at minus 0.8% last month, which is disappointing considering other areas of the economy seem to be recovering. So traders will be hoping for a rebound this time round as a sign of consumer confidence is picking up. On Friday, we'll see the latest consumer price index number from Germany as well as the latest unemployment rate from Canada. The CPI figure in Germany has been on a serious downtrend over the last year, and we may see the euro head to a fresh 11-year low against the US dollar if the number falls short of expectations. The unemployment rate in Canada currently sits at 6.6%, falling from 6.7% a month earlier, breathing some life into the Canadian economy. The number may have been a bit misleading, as most of the jobs created were part-time, so traders will be eyeing the figure carefully, especially regarding the number of full-time jobs, to see what this news may bring. That's all from me at FIBO Group, and I'll see you all next week.